Hello, YouTube. Today we had a gapping crab, which means that we gapped up with a lot of strength and then we just sold off. We actually have a bearish engulfing daily candle and we closed below yesterday's low. So today's question is whether or not there is more downside ahead or if this is it, if we're going to go back up higher. This will be important because we've been tracking the seasonality chart where we're looking at whether it is late November or if it's December. If you stay tuned, I'll make sure I walk you through an update on that. But what's the reason why we actually went up today? Why did we get such a strong gap up? Well, we can note here that the ADP non-farm payroll or the jobs number came in soft at 103,000. And that's the reason why we gapped up today. The Bank of Canada held interest rates flat. And that's pretty much it. The reason why this ADP number really gave us some juice to the upside is because it's giving us a preview for the number coming in on Friday, which is the non-farm payroll number or the government reported number. This one's definitely more important. ADP has not been very predictable lately, so I'm not personally giving it a lot of weight. What this number comes in at, I think, will be important. The other catalyst, now that we see that the market moved based on jobs, what happens to initial jobless claims tomorrow? Does it go above 222? Does it go below? Does the market react bullish to bullish data or bearish to bullish data? I'm not sure. We'll have to pay attention to it. And as a reminder, I will be streaming live tomorrow at 9:15 a.m. if you want to come hang out with me to go through the market open. So I think the market is currently discounting the future. Again, the stock market is a future discount mechanism, and it's previewing these numbers. We started off greedy too. We were as high as 67, even 68. And then it washed out. We're closing here at 63, which is lower than 66, which is where we closed yesterday. This will be important because it's looking like a pop and a sag. A pop flag means we go pop, low, higher, low. Well, this is not a higher low. Our low here is 64. Our low here is 63. What is that? It's a lower low. So if it's going to turn into November, where we get a pop and sag or a gap and crap, probably like these different words, right? Yeah, lots of fun little acronyms. Let's make it so simple you can't ignore it because we talked about this pattern and it's almost there. So now we note that we opened up and, we opened the week roughly where we are now, a little bit higher. We opened up at 455.60, pushed all the way up on Monday to the high of the week, came all the way down to the low of the week. That's at the range. And then today we gapped up we opened at 458.81. So open at 458.81, and then we sold off. We're now getting awfully close here to our weekly higher low. We're now at risk of actually losing our low here, right? Low, lower, lost it. So if it's November, it's going to lose the low. It's going to go lower. And then if it's December, we're going to maintain this higher low. I know this seems so incredibly simple, but there's a reason why we're looking at only one simple pattern. And I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up or subscribing to the channel, I would really, really appreciate that. And I'll thank you ahead of time. So the reason why this is so important is because it just tells us whether or not we're ready for more expansion. And I'll show you the template again one more time because it's really simple. We look at Bitcoin. We can go back here. Everyone's a hollow candle. Hollow candles mean that we're closing higher than we opened. So for 8 weeks in a row, we went higher, higher, and then even higher. There were some periods of indigestion. Indigestion just means that we had micro higher lows during this period right here. They weren't really that much higher, marginal higher lows. So what happens? Indigestion, flag, and then we pop again. If you look at the daily chart for Bitcoin, there is some volatility inside of here too. It's not like it was without any volatility. If we now go back to the S&P 500, what do we note here? Well, S&P has only been going up for 1, 2, 3, 4, 5 weeks in a row. So if we want to track it, we can actually do 3 more. We can actually close this week over. And for a little bit of the week, it actually looked pretty constructive. But now we need to get above 460 to form that weekly higher high. We got 459.65 so far. So if the inside bar holds, it's consolidation. Consolidation as we're going higher is bullish. Pop, flag, but we need the pop. And we're already getting that leading indicator here, which tells us that, hey, this doesn't look all that great. Okay, so if we've explained it in a way where it's so simple that we can't ignore it, if we print the weekly lower low, we're avoiding that Bitcoin pattern. And now I'm going to move here to the NASDAQ because we also talked about an exhaustion gap. What's an exhaustion gap? I'll show you. This right here, the chart is exhausted. Why? It gaps up and sellers are right there, right at the open. They're like, sure, you guys want to buy at 390? Love to sell you at 390. You want to buy at 389? I love to sell at you at 389. That's what it turns into. It's actually maintaining a higher low. So we have a higher high and a higher low. It's technically not blown the low out yet, but here's the warning sign. I'll show it to you. If we now look back in time, this gapping crap or exhaustion gap happened before. It happened here, led to a correction. It happened here, led to a correction. It happened here, led to a correction. Happened here, led to a short-term correction. It also happened here, led to a short-term correction. It happened here, led to a correction. Do you get it yet? There's our exhaustive gap too. Small gap, but still a little bit of exhaustion, which means it went lower. Do you see it? Gap up over the previous candle high and then sell off with a failed breakout. So failed break, failed break, failed break, failed break, right? That one's a bearish engulfing, but didn't close below the low. Failed break and a bearish engulfing. Failed break, failed break, failed break. I hope you're noticing it by now. So the correction can be short or it can be long. It could be over. But if we lose our pivot here at 383.18, it means we're entering the gap zone. And we've already printed a lower low on the weekly for QQQ. This does not look good. Why? Because Chips lead Tech and Tech lead SPY. And for 2 weeks in a row now, we have back-to-back lower lows. And we're currently below both lows. What does that mean? What used to be support 2 weeks ago and 1 week ago is no longer acting as support. People are selling where they used to buy. So what does that mean? It means we're probably going to get the short-term correction if Chips lead Tech and Tech lead SPY. Why? SMH, weekly lower lows, closing below the low. Both of them. All right, let's look at QQQ again. So low, lower low, lowest low. High, lower high, lower high. Okay, cool. QQQ, what do we got? Well, here we got it's a little bit funky because it's actually engulfing candle. The low is about 20 cents lower. Failed break, lower low. And then we got the lower high and lower low this week, currently below the low. So the only part that's missing on the recipe is just S&P joining the party in the breakdown. That would pretty much be it. That's all S&P needs to do. It just needs to print below 453, and that would be last week for QQQ. If on the following candle it goes below again, well, that would be the confirmation. And another thing we want to be very mindful of are these indicators we were looking at. We looked at these on the weekend video where we talked about how not only is the weekly chart looking good, this is going to be for the dollar and also for the VIX. So we go here, we can look at the dollar, and it looks pretty strong. It's back above the 50 MA. It's back over the 200 DMA. And on the monthly, man, it looks like it's studding out. What used to be resistance is acting as support. Classic bull signal. So when the dollar goes up, stonks go down. We want to make sure we pay attention to that. Why? Because if we're planning to make money being bulls, well, we better make sure we know what we're doing. And right now, the VIX is almost back inside the teens, which means that we don't even have any volatility yet. When the VIX is down at the low teens, 13, 14, 15, it means the market is calm, cool, and tranquil. What does that mean when we're below 13? The market doesn't expect any volatility, which means it could get a surprise if we get that flip or the flop and we finally go down a little bit. Thank you so much for tuning in. If you want to watch my weekend deep dive, that's now queued up here on the left-hand side. If not, you can subscribe on the right-hand side and come join me for our pre-market stream tomorrow. Thank you for your support. I'll see you tomorrow.